Hi, everybody. Welcome to the Sales and Onboarding series by RevRag. I'm Arushi. I'm your host, as usual, the founder's office here. Over the last episodes, we've spoken about so many different things around AI, around BFSI, where we spoke about AI agents reshaping everything from onboarding to collections. Last week, we also spoke about data. So, you can always check that episode out on our YouTube channel. Today, we will be talking about a space which is quite often overlooked in BFSI, and that is lending to the informal economy of India. What happens, when a borrower may or may not have a credit score, when the KYC is fuzzy, or when the income is variable? How do we underwrite trust and all around it? Joining us today, we have two guests. First, we have Soham Bhattacharya. He is
Hey, hi.
part of the founding team at InPrime Finserv and has previously led finance and product at Ujjivan Small Finance Bank and Pagar Book. He's been on the IPO floor and has raised over 10,000 crore, built vehicle finance verticals, and multiple other products. And he's now building credit systems for India's informal system, informal prime. Welcome, Soham. We are so glad to have you today.
Thank you. Same here.
And we have with us Neeraj. He's the co-founder and CPO at RevRack. He's worked with BFSI teams all across India and is now building embedded AI agents that guide users right from the onboarding up till the very end and recovering journeys. Thank you for joining us, Neeraj.
Yeah, thank you, Arushi.
So let's start our discussion today with Soham. Soham, can you tell us a bit about yourself, about your background, and how you and your team are building for the informal segment? And now you're building a tech-led informal lending play. What pushed you, towards this area?
Sure. Thank you, Arushi. So, first, a bit about myself. So, I mean, around more than a decade of experience now, but primarily only in the financial services space. Uh, Ujjivan has been where I have spent most of my time. And in Ujjivan, I was primarily in the finance and strategy vertical, a bit and then in the treasury vertical. Before leaving, I also got a chance to build business. Uh, we set up the vehicle finance vertical in Ujjivan. I was leading product there at that point of time. Uh, Post Ujjivan had a small stint in Pagar Book, where we were working on an embedded finance play, and then was working as a consultant at Publicis Sapient. So that's broadly my experience here. I've joined as part of the founding team. So Rajat, Manish, Sneh, there are three co-founders. I know them from long back from Ujjivan times. So and I'm here, joined the founding team, working in finance and strategy, setting it up. So exciting times ahead. So yeah, now that's a bit about me. Now on to your questions with respect to what brought us to this segment and where we are playing in. So if you see the lending ecosystem, you will see the early the new to credit borrowers or the low income borrowers. That segment, microfinance has done an excellent job, right? They have provided, means they have been it's been there for now more than 2 decades, and they have done excellent job in that segment. And similarly, for the segment, for example, let's say slightly formal, uh, where people like you and me, our income is real easily visible. For that, banks are there, larger NBFCs are there, and today fintechs have also done a great job. But now those microfinance borrowers, for example, let's say who maybe 15 years back had started their journey with the microfinance loan. Now, a subsegment of that today has evolved. Their earnings have grown, their household, their aspirations have grown, but the credit services which they today get are still the same, even though their incomes have grown. Uh, but the credit services today which they're receiving is exactly the same. And so, but that so how is their credit demand getting met? It's not like they are unserved, they're underserved. Today, this middle segment, which we call the missing middle, this middle segment, their products and solutions today are not catered to them. They're catered to a one notch or two notch below. As a result, they have to take multiple loans, multiple credit from multiple institutions and meet their demand. And the service which they also get, the service which they are getting is also subpar, because in microfinance or generally you have to do, there is cash payment, you have to weekly or monthly meet at a specific point which is called center meeting. So that whole experience which they are getting is not as per their lifestyle where they have reached. So these households have maybe an average household income above 6 lakhs, 7 lakhs, between that range. But the services, they're still not getting that. And that is where we thought we can work and solve for. So that's the goal. That's why we were focusing on the informal segment, and primarily on the informal. Why? That's why we say the informal prime segment, the top 10, top 20% of that segment. So that's where we have worked on. Yeah.
So I just wanted to understand. So what you're saying is microfinance is taking care of, people who belong to the lower income group, and banks which are everywhere, which are taking care of people who are above, a certain income group. The middle segment, what you're talking about, is the one which is not being catered to properly. Is it what you're trying to say?
Yes, yes, exactly. That's the segment which is not being catered to. And in that segment also, the person who have the informal income. So let's say salaried,
Mm-hmm.
maybe getting a fresher salaried also is being catered. But the informal level, like
Got
say
it.
your kirana store owner, that's the demographic. That is where we are trying to solve for. And that is so that's why here we believe technology will play a massive role. And when we talk about technology here, we are not telling that we will do a digital delivery. That's not the first goal. When we are talking about technology here, we are saying talking about the underwriting piece, because at the end of the day, lending is basically risk management, right? So this underwriting piece as well as customer experience piece, that is where we believe technology will have a massive role, and in future also in the customer discovery role as we go along. Because see today the data footprint which they have, so they will have some bureau score, let's say credit bureau track record, because they had taken earlier the how someone in that household would have taken a microfinance loan. So they have a credit bureau track record. They might have banking thanks to UPI. Some portion of their income might be coming in bank, so they have some sort of banking, not full 100%. Some sort of banking will also be visible. And the third leg is when, in our process, when we go and meet the customer and understand their stock, their whole assess their whole income. So these are three very distinct data sources, and the granularity of that data and to interpret it, that is where we believe that tech will play an important role. First will be, of course, collecting that data through the amazing digital railroads which is available today, and then capturing it and understanding it and working on it. That is where I believe tech will have the massive play.
Soham, can we like talk a bit more about what is happening in this space in India? Probably we can talk how different tier cities, how the situation might be, because I'm sure not a lot of people know about this space, and also there are a lot of misconceptions and misunderstandings about this area of the borrowers. So, any inputs in that area?
Sure. So before means before we say that on the what is happening from a tier two, tier three, or urban, so I would say that this segment is across. It's not a very geography oriented stack segment. This segment
Right.
you will find also in a city like Bangalore, all or in its outskirts or 100 kilometers away from Bangalore. This segment is there across. Where the problem today lies is one is the way this segment is being, as I said, underwritten. Today, mostly this segment of borrowers borrowers. So the problem, the challenge, what it is there, the biggest challenge is that the at our household level, the at a household level, the female will be the one, because microfinance is generally women centric. The women will be the one who will be having the credit experience, and in most cases, the male member might be the income earning member. So the problem traditionally lenders have done is that they have not seen it as a household level, and the lens through which they look at this segment is where they have not been able to underwrite it. So you take both of them and give a household level view and add your additional data points which you get by visiting the customer. That is where you will be solving for this segment. The biggest misconception, another thing, is that if you see the data, microfinance, again, if I take, I'm talking a lot about microfinance, but if you take data, microfinance, if you see, uh, repayment track record, now today's the market has gone bad and all, that's different, but in generally the repayment track records are much better than maybe a formal credit personal loan segment in most times. So it is not
That's very
about,
surprising.
yes, it's because, see, when you, the till the time you're giving credit for actually the need, and for their after understanding their cash flow, there should not be a problem. The moment you're either, like today what has happened in industries, there is over leverage because you have given too much of credit. That is when the problem arises. So but as long as you're understanding the cash flow and providing that in those gaps, there won't be problem, because you are solving for their problem. And so they will be more indebted and more, they will be well, even faster and to pay repay back than a, let's say someone like even a segment like mine. So that's a very wrong perception people have on this segment, which I think with time it will evolve. It already has actually evolved. It's just that if you see the data correctly, then you will see that actually this segment has had a better repayment track record than many other segments across.
No, thanks for the insight, Soham. Really, I mean, I'm sure a lot of people who would be viewing this episode would also not know so much about, the track record and the misconception that you just cleared. Um, Neeraj, I have one question for you. So, again, with regards to, the data not being available or, in very informal spaces, when you build AI agents for digital onboarding flows, digital onboarding journeys, what signals do you see that suggest whether a borrower is from, is from the informal sector or underdocumented? And also, if you have any inputs for, what we just spoke about, the misunderstanding that a lot of people have.
Hmm. Sure. So Arushi, yeah. So what we can do is like we can see from this perspective that like underwriting teams across India, right? Especially for the Indian market, right? People have tried alternative data, right? And it has been a
Mhm.
while, right? Right from 2017, 18, people have been very much aggressive trying if there is any delta, right, in their models using some one way or the other data points, right? Other than the bureau and the transactional data, right? So, but nobody has been able to, scale it using the alternative data. So sometimes, for example, people have tried, let's say, social media data, right, to underwrite, right? But that has been very seasonally affair. In the starting, it would have worked, but like maybe net to net after 2 years, they have scrapped that model, right? Something like that, right?
Yeah.
So there is one thesis for sure that like all the CROs or basically the risk people have always been on the look out for the alternative data, right? So, but with the advent of LLMs and these AI agents, right? One possibility which has come into the picture is that like while these AI agents are deployed on your onboarding, let's say, right? So as you know that like today we have been deploying these AI agents during the onboarding of the fintech players. So we
Right.
start getting a lot of data, right? So that data could be transcripts, that data could be voice related, right? So for example, earlier these underwriting engine teams if you have to see from the informal perspective, right? So they would be having the, let's say, device data, right? Or sometimes they can try to see what kind of internet they have been using or what kind of device they have been using, right? Whatever the uploads they have done, right? What is the quality of them, right? And they would try to correlate, right? But with the advent of these new technologies, right, be it LLMs or be it AI calling agent or basically the AI embedded agents, right, we have better capability to understand what agent i- what kind of interaction is agent doing on these screens. So just to give you an example, right, so for sure we get a first layer of data from, let's say, a mixed panel of the words, right? What it's missing is, let's say, uh, when our agents are deployed over the screen and agent and the users are having those conversations, right? So let's say if the user is putting the income of user gives the bank statement of user gives the bank statement, and there the engine found that like average monthly income is 22,000, right? And the agent is asking that like, hey, what's the monthly income, by the way? And he says 18,000, right? So then and there, agent can basically catch, right? And they can try to understand, right? Ki, okay, what has been the scenario? You are saying 18,000, but your document says, let's say, lesser than that, right? For the better example, right? So they can get the clarification then and there. So you can think that like in the older times, right? So all these, when obviously it was non-scalable, right? So the person or the sahukar who used to lend, right? So he used to clarify his doubts in the same manner, right? Ki, yaar, I am able to see this, but yaar, I am not able to understand this, right? So he used to get the context. So I think with these agents we can help the lenders, right, to get the context right during the onboarding why a particular information is not matching, for example, which in the current scenario is not possible because of the scalability issues, right? So yeah, so
Right.
I think that is there. And second thing is, if you see the kind of conversation they have, right? So we also get a lot of linguistic and paralinguistic, you can say, cues, right, or the hints, right? So for example, if the agent asks, let's say, what is the monthly income, right? तो the customer might say, पिछले महीने का गल्ला मेरा 2 लाख का था, right? So the kind of these linguistic cues, right? So we are
Right.
able to detect the similar or the analogous words across the 12 plus languages, right? So they can be helpful, right, in identifying these sectors, right? I just gave you one example, but I am pretty much sure, right, while we double down, right, we will get 10 of information like this, which will be helpful for the underwriting and identifying, right, about these sectors.
So, Neeraj, just to summarize what you just said,
Hmm.
these AI agents, right from onboarding, in the informal sector where there is not enough data, or even if there's data, there's just a lot of it, it's mixed here and there. So these agents will verify the information in different languages. And correct me if I'm wrong, but there are a lot of systems which are not fully capable of doing this by themselves, right? I mean, a human is still needed where different languages are involved. Is it the case?
Correct. So, like, see, whatever the product is being built today, right? That is built for the mainstream janta, right? So,
Right.
whatever the product is being built, the product manager or the head of the product will make sure that like 80-90% of the cases are getting solved, right? But they
Yeah.
will not make the product for, let's say, another 10% or 20%, right? So that
Mhm.
is where it will come into the picture and take the context, right? So
Yeah.
customer is good, user is good, right? They have all the documents and everything, right? But you are not going to build customized system for those 5%, 3%, or you don't know, right? So that is where these will come and kind of help to extract the exact context, right? So yeah.
Makes sense. Makes sense. The goal is to not leave any clients behind. It is to cater to
Correct.
everybody,
So
all kinds.
today we have the capability that we can
We
cater.
do.
Yes.
That's great to hear. Thanks, Neeraj, for your inputs on how AI just contribute here. Now that we've spoken about this informal lending, I want to touch base on the fintech scenario in India at the moment. So, Soham, my question to you would be, and now that we are talking about fintechs and underwriting as well, how do you feel this area has evolved in the last 5 to 10 years?
Yeah. So I think a lot has happened here. Means I think every other day something new is coming up. Uh,
Absolutely.
right. So I think if I want to look at it, I will look at it in three waves. How this evolution has happened. The first wave will be the digital railroad wala thing with Aadhaar, Aadhaar stack, then coming up, and on top of that, then we had the initial fintechs like the Paytms of the world building wallets on the payment space, and of course, all of this started. And before this started, Geo was the one who brought in internet, and that democratized access. So I think that post that we saw UPI coming in, and that changed the whole payment space. So payments became the main thing about in initial days. All fintech was all about payments. And but once that was the first wave where you build the proper infra, and then payment players started coming up. And I think the second wave was then the payments, and everyone else started realizing how can we monetize this. And that time, the only thing which at that point came to mind was lending. So a lot of these players started embedding payments, and there also payment aggregators also started around at that point of time, and lending became a feature, and a lot of funding started flowing into the segment also in fintech. And this whole this whole phase also got a reality check around that also when lending was thought of as just as a feature, quality was not thought of. And we saw the other side of, while the funding was massive funding happened by the end of this phase, I think we saw funding winter starting to come up. A lot of people are really running helter skelter where what exactly to solve next, because the before that the focus was a lot on CAC, using CAC and just onboarding users, but a not lot on thinking that lending will solve all the problems. And I think that then third wave is when the system, when the ecosystem actually has started, and which I think we are today still in, is when we have started to mature. So the funding winter resulted in people thinking about unit economics, and both the all the players around the started thinking of how to ensure profitability is also focused on, and that helped us to create fundamentally strong companies. Many of them are going to IPO very soon. So fundamentally strong companies. And in the second half of this phase, what we are starting to see today is that like in the second phase, the mistake was thinking that being a technology player while working on lending and lending as a solution for monetization. Today, I think what the best thing which is happening, and that's why it's very exciting phase which we are in, is that a lot of work is happening in the infra space, including, let's say, your own organization with respect to AI, which we are focusing on use cases which will enable the lenders, enable the banks, BFSI space. And I think that's where the maturity of the ecosystem has also come up, and where I think a lot of things will also start growing. Uh, it's for including AI. Reg tech is another place where a lot of work is happening, because at the end of the day, this is a regulatory space. A lot of things need streamlining. So I think that's, if I say very broadly, that's how the ecosystem has evolved. But today we are at a very exciting stage, because first of all, I think another thing which has happened around this time is also the RBI regulations had come and all those things happened. But one thing which has happened is that uh, lenders, be our banks, uh, have become more open to collaborate with tech players, and tech players also have understood the importance of compliance, or understood the importance of regulatory requirements. And there is a much better sense of the ecosystem for all players, both on the BFSI side, on the tech side, and also the fintechs who are in between, the LSPs and everyone. So this, because the boundaries have everyone is doing pretty much a lot of things, boundaries have disappeared, but the understanding between each also has increased, and that's a massive boon for the segment. And I think people like us, let's for example, we have just started and building for the segment. Means along with building our own tech stack, as we have built our own tech stack, we have some understanding of technology. Now we are mm, and meeting people like you, there our understanding is also increasing, and you also have better understanding of a people like us because we have someone who understands technology also. So that combination will take, I think that's why the next 5 to 7 years the scale of growth will be much faster than what we have seen ever, because the infra players will help us to reach these segments faster and across. I'm not saying only about the segment which InPrime works at. I'm saying across all segments you will see that.
I mean, I totally agree with you with, especially in the recent years, there has been a huge boom in digitization across all the industries. And, rightly said, for the next 5 to 7 years, we can expect a lot to come in. Just following that, Som, I have another question that I would like to ask. Since the digital footprint is expanding across India, how have underwriting and the related discovery models, how have they evolved? Can you talk a bit about that?
Yeah. So with respect to how the things have evolved, I think before that I will just go one step back and talk about thing which has not evolved, which is the
Yeah, absolutely.
which is which I think has not evolved for centuries, for is in which is the lending business. The lending business is very straight cut simple. A, it's a risk management oriented business, and it is, some people say it's a collection business, which I don't agree to. It is a selection business, because if you think if it's a collection business, they will have other second order effects, which was seen in few years back. It's a selection business, and it's an execution play. And by when I say execution, I don't only mean execution at the field, I mean execution across. I mean, from your liability to your operations, everywhere that execution plays the only mode in this business. So this business, that's why the boring stuff is what, if you do regularly, properly, this business will grow. And it is not also a business where in 1 year suddenly all your things will get turned. It's a compounding. But the beauty is a compounding business. The longer you stay, the better return will. So that has not evolved, and that should not evolve. And so that's why also means I'm just digressing from the point. That's why also I think
No,
AI
please, please.
related agents and everything will play a major role, because it's an execution business, and AI agents, I think that's where they will be the best for solving for. There is not a need for so much of ideation here or anything here. You need to focus on the execution piece, and, and getting all those data points and making sense of it. That is where I think also AI will play a massive role in this segment. And it's just again means, if you see for anything, if IT services as a if you industry, the biggest player, biggest consumer of IT services is nothing but BFSI. Similarly for AI also, that's the thing which will happen. BFSI will be the biggest consumer of that service. So, and because again, as I said, it's execution business. So now coming to what has evolved, of course, on the customer discovery side, today, to actually reach to a customer, there are so many multiple channels, right? If through performance marketing or just through an app, you can reach to a customer ASAP. And it's like it's as fast as quick commerce. Means if you want to today any financial services, just not lending, any financial services, you can reach as faster than quick commerce. Actually, just to download an app and you will find the service which you want. So that is the place where a lot of evolution has happened, and it will continue to happen. On the underwriting piece, I think also what Neeraj said was, I agree to that point, is also that, like, see the models, uh, it's not like a new thing, it is there for a long, long time. And from rule based, we are seeing model based, but still, even RBI came up recently and tell that we cannot truly trust, completely blindly trust a model based, because biases which are there can come up in a model. But yeah, we are seeing that there is a change happening. but the best, I think, where we can see is it's more of a like a co-pilot sort of a thing where it's happening. The models enable the traditional systems. The agents will enable them, and that's where I think the evolution is happening. Alternate data, there has been a lot of work done, may not have been really successful till now, but I think it's a journey because underwriting is a slow thing. It won't happen in a few years. It will take its time, but I think the lot of good work is happening there. I think Neeraj would be able to tell more because you have all been doing these things around.
So I think like your one point, right? That lending is a execution business, right? So I think where that is very apt. Very recently, uh, uh, a founder friend actually came and he also runs a fintech company, right? They are into health driven fintechs, right?
Okay.
So that is a health lending they are doing, right? So like they have been doing a lot of experiments, right? So I also try to understand with lot of these clients, right? uh, what is your perspective, right? Why do you want to use these AI agents, right? I also try to understand other way around, right? What is their expectation, right? So he was saying that like, I do not want to scale this business in a conventional way, right? I want to try something new, right? So that is why I am trying to give my next 6 months exploring all these solutions in the market. And that is, I'm for sure that like I do not want to scale, right, this product using the conventional way, right? So I think that makes sense actually, right? Because whatever the kind of input you will give, you will get proportional output, right? And that is where he is trying to leverage, right? Ki, let's say if these agents or whatever the new stuff coming in AI could help them in getting some exponential output, right? So yeah.
Yeah.
Thanks for your inputs, Neeraj. Now that we have already brought in, AI into the conversation, I have like a few questions to ask as well. Soham, from you first. Nowadays, everybody talks about deploying AI solutions for multiple use cases, right? But when does AI actually help in lending to the informal segment, which is, very unorganized? And if we talk about voice AI here specifically, where do you see it fitting? AI and then voice AI.
I think, well, so from a AI perspective, voice AI especially, I think it's the first use case where I think all lenders will enter into. And the reason is just to think of it, when sometimes it gives me goosebumps actually. If you think of it, if I want to reach a million of my customers in next 5 minutes, I have that capability to do that. And which initially, traditionally, maybe initially the telecalling whole business was set up that field team were not able to reach, so let us another channel through which we will reach. But then the humans are there is limited capacity, there limited ability. So that whole piece means it is not only, I won't say it's only in one aspect where it can work, but from customer financial literacy piece to onboarding to means I was just thinking that means it can, well, today, like when we are doing like say personal discussion, for example, so the field team goes, meets the customer, does the assessment. It's just like a police has a body cam. If they have a body cam and they can record, the agent can just revalidate whatever the the field executive has entered and can give a much better feedback to the backend credit team. And their backend credit team also, there is an agent who works with them. So the productivity aspect of it can just skyrocket. And and then collection, I think collection is a use case where there is already, we have seen work happening, right? So because means there you need to understand the cues, as you say, as Neeraj I think start the the tonality of how the customer is speaking, and at a vernacular level, it's still evolving. There's work to do, but I think that those are the points where an AI can catch and help us to get the things resolved faster, and that's what's exciting also. And so when people say that a lot of AI is being, means that there is a lot of AI buzzword across, but there are relevant real use cases, which is today there. It's not like 10 years or 5 years later those use cases will fructify. It is today it will fructify, and we are already seeing results. I think large NBFCs, like I think Bajaj, the largest, they have already 10 to 15% of their calling and all is already moved AI. So it's already now happening, and so I think the voice is something which will start off with. And today I think primarily we are seeing collection as a use case, but we will see all across, and also on financial literacy piece, especially for the segment which we are working in, because banking behavior is a major issue here. They might have intent, everything is there, but banking behavior might be an issue. And I think a voice bot, a companion sort of a thing for them, can help them evolve. So I think there is a lot of use space. And just when I was saying companion, I just remember that what Grok is doing with the companion model. I think that's a place, means in various use cases you will see a lot of, because that's where, means even in trust will start building around that. You're mute, you're put. uh,
Sorry, yeah. Absolutely makes sense what you just said, and especially when you said collections is a place where there's a lot of use case for AI. In fact, we recently did an episode where Neeraj was also there. There were two Neerajs in the conversation where we spoke about collections and how, especially in the early DPD days, a lot of time can be saved for both the customers and the agent. Um, so we spoke about use cases for AI, but I also want to understand, do you think there are spaces in the informal area where AI might not come of use, or maybe in the later stages, but not at the moment? Are there any red zones?
um, I think more than informal in lending, because compliance is there, and 100% accuracy is needed in certain places. So I think places where the final decision needs to be taken today, was there are
Mhm.
chances of hallucination happening. I think still we are not there in the final decision. It is places, I think that is where I think only I think will be a place where maybe, yeah, like when hallucination doesn't happen and you disperse to, rather than A sometimes B, that sort of thing doesn't happen. So those guardrails, if you can put in, and I think that's the only place I think where maybe AI should not be implemented as it is today.
No, makes absolute sense, especially the last decisioning. Just related to this, Neeraj, I have a question. When AI agents interact with customers, what are some signals or signs that we know that customers have understood the agent? They've not just responded, they are getting the context, they're understanding what the agent is saying. Any inputs around that?
Yeah, so I think that like we can try to understand it, right? Ki we can, see it from another perspective, right? If AI agents are adding any value, let's say in the onboarding or not, right? So let's say why I'm saying, why I'm putting this question is because if they are able to, uh, have better context and they are able to conversate, right, the way it is required, right? So it should reflect in the onboarding metrics as well, right? So for example, back in 2017-18, let's say when I used to work with Moneyview, right? Let's say 80 80% of the applications were fed by humans, or basically human assistants were needed, right? Fast forward 21, the metric was reversed, right? It was around only 10% of the applications were assisted by humans, right? So of course that was digital lending, right? Where the average salary could be around 30 to 35,000 rupees, living in tier 2 city, right, of sort, right? So today if we see, right, and try to understand that, like, hey, uh, out of those 10% humans which have been assisting, right, how many of those 10% has been reduced to, let's say, to lower numbers, right? So let's say we have, deployed our AI agents, right? And there are many points where the AI agents will be interacting with the user, right? It could be like, anywhere. And if we go to the fundamentals why user drop off, it could be mainly because of the two three fundamental reason. One is the expectation mismatch. For example, if they're looking for 10 lakhs and the lender is offering, let's say, 3 lakhs, he will get disappointed, right? So he will drop off. Maybe there is some confusion, right, in the UX UI. Oh, I'm not sure how to fill this information, he gets drop off. Another information could be that, like, let's say, something which is very much unimpressive. Let's say a processing fees. He was not expecting that, like, for a 2 lakh rupees loan, 15,000 rupees processing fees will be charged, right? So he gets dropped off, right? So, and when the user, these human agents call, right? So they obviously try to tell their perspective, what they like, what they don't, or they try to negotiate, right? And these human agents also try to understand. So what we have seen with the clients, right, that, like, let's say, from stage 1 to 3, right, that was a, let's say, 15% of the human assistance was needed, right? Now the same journey, right, has been improved, and how we came to know is that instead of 15% of these applications which are crossing stage 3, now only 3 to 4% or 5% at max human assistance is needed. So that delta 10% is being attributed against these AI agents, right? So that is one of the parameters, right? If you want to talk about from the outcome perspective, right? So that is one good thing. So at least, so that means that, like, whenever these users are having any doubt or any questions, right, they are not letting the users drop off, right? And they are basically trying to solve then and there, right, before the intent or any confusion or intent basically fades away, right? So they are catching the customers then and there, helping them, right, answering any relevant questions they might be having, and pushing them to move forward, right? So yeah, I think these are the pointers which has helped us to understand that, like, yes, it is working for the onboarding systems across fintech, at least whatever the POCs we have done successfully, and they have moved to the contracts.
Thanks for the descriptive answer, Neeraj.
Yeah.
Uh, when you were talking about um, how there are these conversations between agents and India, a question just struck up to me, and it is, um, if we specifically talk about AI in India's context, what this is a question to both of you actually. What are some major challenges that we are seeing? And if there are some other countries which are facing these issues or are not facing these issues, especially language barriers. Uh, what like can we talk a bit about those spaces? I mean, we can start with India, of course. I mean, because uh, again, when there are so many languages, there are a lot of challenges as well. So probably you can start with Soham here.
Yeah. So I think the biggest challenge, when, as you said, is the language aspect here in India, because each of the language is because the tonality of how people talk also is different at every area. So that is where we see a lot of, I think, challenges will come up, and that is where I think also that's why solving for that is also the biggest piece also here. I think that's what I will have in mind. I think Neeraj can talk about it a bit more.
No, 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 of course, matlab, because India is such a diversified country, right? The way you speak a certain thing, right? So even if we talk informally as well, right? A person, even if a Haryanvi person says a normal thing, right? We might, a person from Lucknow might get offended, right?
Right.
So that is the kind of tonality, right? We are maybe that guy is gentleman, right? Oh, from Haryana, right? So in the same and so I think that is so there, right? So another thing is, I think, trust is there, right? So I think, like, Indian society, I think, in one way or the other, as we know that, like, there are certain tiers, right? And we have seen very distinctive behavior as well, right, across these tiers, right? So in my view, trust is one of the most important things when people are dealing with the financial products, right? So especially when it's a push product, right? Let's say people are offering FD of the words, right? And here also, like in case the genuine users, whenever they are taking loan, right, they have genuine question, right? For example, what kind of penalties I will be charged, or like will there be any delay charges, or basically they want to make sure that like whatever the rate of interest you are quoting, right, you will be taking that only, right? So they have there in their mind that like maybe you are quoting 28%, but somehow you may not charge more, right? So that trust is something that like, and that's why you see that like at least in the personal loans I have seen, right, there is a good repeat rate if customers get trust, right? Because they know that like,
Yes.
okay, even if they charge higher, I know they won't go beyond this, right?
Right. The
Because it's
transparency is very
correct.
important here. Yeah.
Transparency is very important, and these numbers are also very a bit irritating for common person, right? How to understand, let's say, reducing rate of interest, right? So they cannot understand, so that is why trust comes into the picture. Okay, okay, maybe I cannot understand all the numbers here, right? But okay, I trust you, right? You won't charge more than that.
Right. Like, anecdotally, matlab, just
Hmm.
for one example, just is from a trust perspective. So recently, one of our field officer, when he's a star field officer, so he had onboarded a customer. So and that customer has all sorts of loans, means he has access to everything. So we were just why he selected us and what, and the whole point was this this guy's relationship with him was good, and he felt that he can trust that guy.
Hmm.
That's why he gave the business, and that was just a simple reason and nothing else. There is no other space
Definitely.
metric around it. That,
So that's
so
a classic
that's the thing.
example.
Yeah, yeah.
Correct, correct.
I mean, that's a great point, right? It's like you just said, the customer didn't think about anything else, just trusted the person because he knew the person. And I'm sure this is the case across India, across different cities. So there's a lot that banks and NBFCs can use this trust to increase their customers base. Uh, Now that we have come to the closure of this episode, Soham, I want to ask the last question from you, and it is just on a closing note. Is there any myth or myths about informal borrowers that just those myths need to be retired? Like they're just there. They don't mean anything. They just need to stop.
Yeah, I think the first thing which I said, that about the repayment behavior, that's a myth.
Yes.
And the other means, another thing is that today, uh, while we also believe that we have to physically, it's physically we have to go, and as well as via data we have to do the assessment and piece. But the issue is here not that the informal economy cannot be served through digital means. They have the full capability
Yeah.
and everything to be served through digital means. It is us, the lenders, in are not, as of now, we are not enough capable enough to assess the borrower without physically visiting. That's why this whole model is there. So when it's means, if you look at reports and everything, it feels like as if, because the segment is not able to do digital transactions, but they are doing UPI right, left, and center. They will be more available in TikToks than anyone else. So they are pretty much digitally active, and more active maybe than someone like you or me. So it's today the biggest issue is not them, that they are that segment is not being able to be served through digitally, but the issue is with us, the lenders, who have not been able to build enough proper underwriting models that we can select the right customers through a digital mechanism. I think that's the takeaway I think we should have for this segment, as well as, of course, repayment behavior is for the prime layer of, as long as you select the customer correctly, you won't have a issue with the repayment for this segment.
That's a very, very apt thing you just said. They are serviceable. They are ready to be serviced. It's just from the lender's POV. there's a lot that needs to be done to serve to those customers. I mean, there's a huge base right there for
Yes.
them to cater to. So, on that very end, we have come to the end of our episode today. Thank you so much, Soham, for giving us all of those insights on AI deployment, underwriting, informal sector, and a lot more. And Neeraj, thanks for joining in and talking in depth about AI agents and their onboarding flows. To everybody watching our episode today, thank you so much for tuning in. We had a great time, and we always have a great time having these episodes and having you watch them. We will see you all next week with another episode. Until then, thanks a lot and bye bye.
Thank you.